Singapore's port was declared the world's busiest last year, handling cargo from over 160 countries. But with the economic downturn, the port's activities and the nation's economy have been hit hard. The country is now in its worst recession since it was founded over 40 years ago. I'm Fauzia Ibrahim. In this edition of 101 East, we look at how Singapore is weathering the current global economic storm. Singapore's strength as a globalized nation is now its weakness. This city-state has no natural resources and depends almost wholly on the international economy for its growth. With its main trading partners, namely the US and Japan, in financial trouble, Singapore is facing a recession that could last for years. We take a look now at how Singaporeans are coping with the nation's worst ever economic downturn. Singapore, one of Asia's best success stories. With a stable government and solid infrastructure, it easily attracts foreign investors and companies. Its economy and affluence is the envy of regional neighbours. Its citizens chase the Singapore dream of the 5 C's: cash, credit cards, cars, condominiums and club memberships. But that dream is now on hold.
I was working with a Fortune 500 company for about 6 months, half a year, before I was retrenched. I have been applying for jobs, whether those who are on the papers, going through contacts, networks, going through government agencies. Yeah, I think I applied for more than 200 jobs, but nothing.
Jolene Lim lost her job as a recruitment agent 6 months ago. She is among 10,000 Singaporeans who have been retrenched since the economy started to decline. While she now has more time to spend with her 4-year-old daughter, she's anxious about her dwindling finances.
I'll be living on instant noodles and bread and simple, very, very simple stuff. Yeah, no new dresses for the Chinese New Year. I am part of the people affected by the recession. I'm retrenched. I'm a single parent. But when I tried to seek some assistance, I was told that I don't qualify for help because 2 months before I was retrenched, I bought a flat. And yeah, so because I own a 5-room flat, I'm deemed to be the rich people.
Like many Singaporeans, Jolene was unprepared for how much the country was affected by the global economic downturn. This trade-dependent city-state has seen its domestic exports drop by nearly 35% from a year earlier, battered by declining overseas orders. The outlook is not positive, with leaders expecting the nation's economy to contract by 9% this year and unemployment hitting record highs.
Unlike usual recessions that Singapore has experienced before, this time round we're expecting the recession to be more long drawn. And when given that the global market, the US, the Eurozone and the Japan, right, they are likely to not recover as strongly as what we have seen before. So their demand might return, but it might be very weak.
For the first time, Singapore's government has dipped into its vast reserves to fund a $13 billion stimulus package. Among the measures is a jobs credit program where cash grants are offered to companies to cover part of the wages bill. The scheme is aimed at lowering the risk of further job losses.
Fundamentally, it's a program to do job retraining, and the government is covering very significant portions of the cost of that training. So we've seen some of our companies actually shut down production lines and take the people on the production line and send them to training. The jobs credit program is letting a lot of companies, especially the larger companies, hold on to people that without those programs they would certainly have had to get rid of.
But not everyone agrees the scheme works. After losing his job, Gilbert Goh set up a website for other retrenched Singaporeans. The feedback he's received about the jobs credit scheme has not been positive.
The jobs credit scheme, right, it's quite obvious, it's very pro-business, but the aim of the government is to take care of the businesses. They also give you some allowance. If I'm not wrong, it's $4.50 an hour. If I'm on a 9 to 5, kind of a cost. So a month is like less than $700-800. That will not be enough to put food on the table for a family.
Singapore has no welfare state for the unemployed. Instead, the city-state has a compulsory social security savings plan for retirement known as the Central Provident Fund, or CPF. Many jobless Singaporeans are disgruntled the government will not allow access to these savings in their time of need.
Some have wrote to me and say, hey, I have 50 to 80,000 in my CPF account, but I only have $800 in my bank account. You know what the irony? When I have a lot of money, I can't take it out. But here I am struggling with $800 in my savings account right now without a job.
The issue of blue-collar foreign workers has also become a controversial topic. For years, migrant workers from China and Bangladesh have been hired for jobs Singaporeans would rather not do. Thousands work in the construction and public works industries. But at a time when Singaporeans are desperate for work, many, like retrenched labourer Lee Kim Seng, are questioning the government's policy.
The government thinks Singaporeans only want good, easy jobs. But that's wrong. They only get foreign workers because they can pay them less than a Singaporean. So, of course, this affects us all now.
The current economic gloom could test the government's popularity. Some analysts have begun to speculate that Singapore's ruling People's Action Party may call a general election way before the deadline of 2011, perhaps even at the end of this year before the economic situation worsens. But many observers don't think the PAP's political power will be greatly challenged.
There's very little in the way of serious opposition. I think it may cause a few more votes, especially if things don't improve more than we would expect. The Singapore government is quite liked and quite strong.
With such strong faith in the government, most Singaporeans are confident their leaders will see them through these grim economic times. Others are praying for better days ahead. For more on how Singapore is dealing with the current global economic downturn, Tony Birtley spoke with Finance Minister Tharman Shanmugaratnam.
Minister, thank you very much for speaking to us. And Singapore has been such a success story, financially speaking, for so many years. Now you're facing one of the biggest crises in your history. You're revising your contraction figures continually. Now we're talking about something of a contraction rate of about 9%. Some people say maybe more. How do we get here? How bad is it, and how bad can it get?
Well, no one can say for sure now how far this is going to go, how long this is going to go on for. But it's safe to say that a V-shaped recovery, some sort of early recovery, green shoots becoming trees within a matter of 6 or 12 months is not on the cards. So this is going to be a long haul. Short-term forecasting is a hazardous game. So we've got our own forecast, -6 to -9. I noticed the Germans have just revised down their forecast to -6. Everyone's moving downwards. But it's still a guessing game because there's a lot of uncertainty.
But how difficult is this for Singapore? You're so reliant on other factors beyond your control.
Right.
How can you minimise the adverse effect of these?
Well, we've always lived with the fact that we're a global city exposed to the world. The state of world demand is something we can't control, but we can do what it takes to prepare for volatility, not react in panic when you get sudden slowdowns, not get too exuberant when you get a bull market or you're in a sustained period of rapid economic growth. Expect that there'll be shocks from time to time, and the fundamentals are what we are focusing on in this crisis. You can't manage demand, although you can do some things to mitigate the contraction. But fundamentally, what we are trying to do is to protect jobs and, more importantly, to get workers trained. Use the slack period of a recession and a bad recession to train your workers. We tell every employer that we are providing very substantial subsidies for it. There will be an upturn. Let's come out of it, not in the same place, but stronger.
I mean, you've been saving for a rainy day. The rainy day is here now. You're digging deep into your reserves, the first time in your history.
Not so deep, but we're digging into the reserves.
But how long could that continue for? You're waiting for the upturn.
Yes.
If that doesn't come this year, this fall, next year, what's the prognosis likely to be?
Well, I suppose our advantage is that we have not resorted to debt. We have never borrowed in order to spend. So all our government spending comes out of revenues, and in this rare instance, we have dipped into our reserves with the approval of the elected president. We do have significant reserves. I mean, we don't reveal the exact size, but everyone knows that they're significant. Our real advantage is that we've got a revenue base that allows for significant spending, that allows us to respond. We've got a consumption tax, a GST. We've got a framework in which we can draw on the returns from investment of our reserves, which are not insubstantial. And we've got a system of income tax with very high compliance. And although we don't tax many people and our tax rates are low, it's a decent source of revenue.
Basically, you're through the first phase of this downturn.
Right.
People are saying the second phase could be hitting home a lot harder. You're going to have higher rates of unemployment. People will suffer, feel the pinch. I mean, the first phase, foreigners are going, migrant workers are going.
Yes.
If this second phase kicks in, how devastating could that be?
Yes. Well, in some ways, we're already in the second phase. It's clear unemployment is going up. Unemployment rate is now about, it's over 3%. The resident unemployment rate, which is more important in some ways, is 4.8%. What are we doing about it? We are helping workers stay in jobs or get new jobs by substantially increasing our support for employers in two ways. First, we are providing every employer with a jobs credit. If you employ a worker, you get a jobs credit of 12% of the worker's wages, a very significant support from the state. Second, we are subsidizing training very heavily, 90% subsidy for the cost of training under a whole range of causes that are relevant to the economy. So when you put the two things together, and you also add in the fact that we are helping banks to keep lending to companies, particularly smaller and medium-sized enterprises, it sort of sorts out some of the cash flow problem that the companies are going through. Of course, companies that have fundamental difficulty, or who've got business models that have no longer viable, nothing we can do will support them.
We're going to have to take a short break now. You're watching 101 East and our interview with Singapore's Finance Minister, Mr. Tharman, and we'll be back shortly.